Hi everyone, hope you're doing well on Sunday evening and you recovered well from all your fun from last night. And Sunday was a peaceful day for you as you recuperated and recovered. Tomorrow is Monday again and it's a full work week, and I'm sure a lot of you are working. I'm currently in Bangalore. I have a lot of work here in Bangalore with a new team. So as I'm in Bangalore, I'll try and record remotely and send the videos out to you. And I do wish you have a wonderful week ahead of you. As promised, Rupesh did pull something for me to talk about. He wanted to know why we don't talk about Aditya Birla. Aditya Birla is a big family and it's a big industrial powerhouse like the Tatas. Why is Anand always talking about the Tatas, but he doesn't talk about Birla? He knows, okay, you don't talk about Reliance, understands that. But he's like, why don't you talk about Birla? Why can't we look at Birla companies, is what he said. So I thought, okay, since I explained that to him, I can take that same explanation and we can talk to you, is what Rupesh said, and also let viewers know why we don't look at Aditya Birla. Birla is a great brand, it's a great company, it's an old company, and it's an old family, and they are in a lot of industries. They're a very diversified group. There's nothing wrong with them in terms of that. What are they in? They're into cements, they're into paints, which have just started recently, Birla Opus, that is. They're into cables, they're planning future sanitary ware, and plumbing is something they're looking at. And they have Grasim, which is their holding company. Hindalco, that aluminum company, they have 30% holding, and they're into also, recently they've decided to get into jewelry. They're also getting in, Vodafone is owned by them. So there's a lot of things the Aditya Birla group is doing. And recently they had made news for this platform of theirs, online platform, B2B platform, which is known as Birla Pivot. Birla Pivot is an online platform where it's an end-to-end solution for any business which is into construction. You can go there and you can get everything which you need related to construction on a single point, and it's easy to place the orders, and all the equipment, everything is available, and you can place the orders and they'll deliver it to you, saving you a lot of hassles of sourcing different materials from different places and all the bottlenecks and logistics, all that involved. They try to smoothen it out for you, and there was a lot of news about it because I think last year they've crossed 1,000 crores in terms of revenue and sales. So there's a lot of hoopla about it, and this is the main reason why Rupesh came to me and said, why aren't we talking about them? They're also like Tata's, they're trying to do an online integrated platform. They've had a lot of success in B2B, there's no doubt about it. But in B2C is something which I've always struggled with. They're trying to work in that. The problem with Aditya Birla is it's an empire which is built with a lot of debt. And that is where Anand has the issue. And in the current environment we are in, debt can be fatal. To talk about debt, Hindalco itself has 78,000 crores. Ultratech has 5,541 crores. And that's where the new company, the cables and wire company, where they're doing a capital expense of 18 billion rupees to set up that cables and wires business. That capital allocation is happening under Ultratech. Grasim has a lot of debt in foreign currency. And of course, Hindalco is invested in a company called Novelis, which has revenue in foreign currency, which helps them a little bit. But you can see the much of debt they are carrying, and some of it is especially in foreign debt, which is a problem. What everyone wonders is, even Aditya Birla Capital has a debt to equity ratio of 8.17 now, which has gone up remarkably from 1.42 from 2022. And Birla Carbon, which acquired SSOE, was done for $450 million. That was also done through debt finance. So there seems to be a go-to thing for them. Whenever they need to do any kind of capital expansion, they have a need for acquiring something. They seem to be, instead of looking at keeping revenue and storing the revenue and creating revenue streams and using that to do a capital expense, they seem to be always piling on debt. They do keep promising they're going to become zero debt-free companies. Like Ultratech, they have promised it will become debt-free. It is yet to become debt-free. And Ultratech is a very big company, no doubt about it, in terms of volumes of sale. They're number one in cement. I agree with all that. But the problem with debt is, it's like cancer. And if you do not know what is happening, it can catch you unaware and squeeze you. Because with the rupee the way it is, and the dollar the way it is, and the current environment the world is in, and where the US Fed is sitting, the rupee is not going to get any stronger. If anything, it will keep getting weaker. And that means that the amount of money you have to pay for every dollar of debt which you have taken on board keeps increasing. This is the main reason why Anand does not look at the Aditya Birla group. Anand has mentioned in many videos that there is a friend of his who's put up a detailed video on Hindalco, and he asks many of you to go see that video. I'll ask Rupesh to link that video again down below. Do go see that video. that video gives an in-depth analysis about Hindalco and gives you a deep understanding on the way Aditya Birla works. Even in the case of Vodafone, it's very easy for them to fix the problems for Vodafone. But they seem to be hesitant to do it, and they're letting the debt just sit there. And recently also they made a news that the biggest problem they have is the management of the group. And now they've tried to fork out 2 levels of management in the group itself, where all the old companies will follow the old management style of what they were doing before, while the new companies which are coming up will follow the new 2.0 kind of management, and where approvals and things will be more agile and they will take faster decisions. Because historically they've known for taking very slow decisions and they're very slow moving. There's a lot of bureaucracy on the top, which is understandable considering the age of the company, age of the group, and the size of the group. But the problem is, in a current environment, to not be agile is a big Achilles heels. That means it can be something that can destroy you. It could be the one point of weakness. Achilles is a famous Greek hero who was, impossibly perfect in all things he did in terms of combat and bravery. But his only weakness was his heel, and that was the heel which finally kills him. If you do not know the Trojan story, go read it, or you can see the movie where Brad Pitt acted as Achilles' heels, and you'll understand the meaning behind what I said. Same way, Aditya Birla's groups think more than debt, I would say, is their management. They really need to relook at this, the way they move and take decisions. And piling on this kind of debt, I really do not know if it is viable in the current environment the world is living in. Yes, this was a very good thing to do 10 years ago when the world had a lot of 0% interest running throughout the world. It was very easy to borrow money. There's free cash lying on the table everywhere, and money was just flowing freely everywhere. And you saw the Indian stock market itself, where it's gone through this bull run. Now the world has changed, the paradigm has changed. Now interest rates are very high, not seen in most lifetimes of most people in this world. They're that high, and when interest rates are that high, it does have an implication on every single dollar you borrow. This is not only true for Aditya Birla, this is also true for governments. This is one of the main reasons why the American government itself is going through a phase where right now where they're trying to slash their expenses. Because the interest rates where it's sitting, every time the US government also borrows, it has a high interest rate to pay, which is what is one of the main reasons why Doge and Trump are pretty much trying to, a lot of you are thinking are destroying the American government, but at the same time their debt is so high, they have to find some way to bring their debt down. Maybe burning some of the houses down can bring the debt down is what they're hoping. I do not know if that is the most wisest way to go about it, but it seems to be the way they're going about it. When debt can hurt the country which has as a reserve currency itself the dollar, they own the dollar and they themselves are seeing the pressures of debt and the way it's going, you can imagine what will happen to a group company like Aditya Birla. And in history, has it happened? Have group companies disappeared because of debt? Yes. Great empires, like I've said before in other videos, Roman empires have fallen because of debt. In history, actually, most reasons why great empires fall is not because of plague or war. They fall because of economic reasons, because debt finally kills, and that's what destroys empires. So, as an investor, where we have only a little capital to invest, this is the main reason why we cannot explore the Birla Group, even the Grasim holding company. If you look at it, analyze it as, in parts, there's a lot of debt in the holding company itself. So I do not know if you agree with this or not. I would love to hear your opinion on what you think about what I just laid out on the problem of debt and the amount of debt the Birla Group is carrying. If you have a different opinion, I would like to hear it. Or if you agree, I would like to hear it. I'm there on Instagram available. You can catch me there. If not, you can always catch me here on the channel. But I'm not able to interact with you on a conversation. It's a one-way street. So you put the comments down below and Rupesh will let me know and I'll try and answer it in another video. Other than that, if you like having a conversation with me, you can come and join the Tiffin Coffee Range Challenge group and we can have a further conversation on this. As you get into this week, like I've said in previous videos, be careful. Don't get overexcited if the market is correcting strongly. Not get worried or panic if your holdings seem to be shaking a little bit. It is expected. It is turbulent times, right? But you are safe as long as you're investing in Tiffin Coffee Range. The simple reason why we call it Tiffin Coffee Range is whatever you spent on last night for dinner or the previous day for breakfast, when you went out to eat, you would not think twice about it now and say, okay, I spent 200 rupees or I spent 500 rupees. That's the same way we say you should invest, because that 500 rupees which you're investing today, if you buy a good quality stock, then you do not worry about the price fluctuating from 500 rupees to 200 rupees or going to 500 or 600 rupees. It doesn't affect you because you have the same attitude you would do spending something small in a cup of coffee or a plate of tiffin. So that is the idea behind it. For those of you new to this whole idea, why we do this tiffin coffee range investing. It's also famously known as dollar cost investing, if you want to, the other name for it, which is there. These are not new ideas which we are preaching. These are tried and tested, very old ideas. It's one of the best and safest ways to invest if you really don't understand how the stock market is working. For newcomers, it's one of the easiest ways to invest, other than sipping in the nifty passive funds directly. Thanks for watching the video as always. Tomorrow is a great week. I wish all of you the best for the work week ahead. I'll see you tomorrow with another video about something interesting. I think Rupesh has MFIs, microfinance companies, on the list. And I think we're going to be talking about IDFC and IndusInd Bank tomorrow. So look out for that video and do let me know what you think. Thank you for watching the video as always. See you tomorrow. Bye.